May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. Today is Tuesday, March 7th. Hello, my babies. So, what is QuantBox? As you know, for those of you who've been here before, QuantBox is a global macroeconomic quant in a box. It's an amazing fundamental tool that gives you all the fundamental data you need, as well as a fundamental bias. It's absolutely top notch. It takes so much time out of collating data. Plus, there's a whole bunch of nice, nifty features like a market heat map and some other things I'll show you now. A 1 week trial is just $7.90. I sincerely recommend you add it to your trading. All right, cool. So here you can see the dashboard. It's beautiful, right? You got all your cross currencies, gives you a bias, it collates all the data for you. As you can see, you've got a score chart summary, you've got seasonality, you've got a daily chart from a technical perspective, some fundamentals, sentiment, upcoming news. It's beautiful. What we've been doing recently is looking at the market heat map. And what we do here is we take a look at our pairs that are the biggest winners for the session and our biggest losers for the session. And we then go into a second QuantBox tab. So for example, let's say we're looking at Kiwi dollar, and Kiwi dollar is currently up. You could then go into your Kiwi dollar on your USD currency pair. You could say, okay, Kiwi dollar, you're currently up. What's my bias? Oh, my bias is sell. Now that's a nice signal, because what you've now got is you've now got price rising with a bearish bias, which means, can you sell it? Now, at the moment, a lot of the currency pairs are currently consolidating. So what I'm currently doing is paying attention to technicals as well as my fundamentals, but I'm leaning more on the breakouts of the technicals while still paying attention to my overall fundamental bias. Reason being, I don't want to trade low volatility. Here's a good example. Aussie USD, currently sideways. Not touching it right now. I know I'm at a monthly M2, but if you look at your Aussie USD, you'll notice Aussie USD is currently bearish, but you are at a monthly M2. So you probably think, well, can't I buy this? Well, it certainly is possible that this jumps up and pulls back down and heads up higher to the monthly M4, but you know your fundamental bias is bearish. I spoke about this yesterday. I said, if the bias is bearish and you buy, you are trading against the bias. Be very careful of doing that. Make sure you verify that properly. How would you verify that? Higher high, higher low. Okay. As you can see right now, we're still stuck inside a range. Okay. Still stuck inside a range. What you're waiting for here is you're waiting for a breakout. Now, I mean, this is completely out of position for a sell. You've got a profit-taking zone right over here. Notice how narrow your pivot points are. Why is that? It's because the calculation for pivot points is based on the previous volatility. And as you can see here, previous volatility is very, very low. So these pivot points don't really represent the true nature of the market. At some point in time, when this breaks out, we will break out of pivot points, okay? So you want to make sure that you're paying attention to this Aussie USD and the other consolidating pairs and making sure that you grab an opportunity when this breaks out and pulls back. Now, the fact that we are currently in such a position for a buy, and because we're in a range, I know that my fundamental bias is bearish, and I certainly am a bear on the Aussie USD. However, I am paying attention to the breakouts, okay? Sometimes your technicals can change before your fundamentals. And I want to be aware of that in this situation, okay? So in this situation here, if price breaks out and pulls back to the upside of this range, why wouldn't I be short-term long? Why not? But I'd be aware of the fact that I'm short-term long, and I'd be very careful of where I take profit, because the overall bias is bearish. If you want to be completely disciplined, you could wait for either a bearish breakout. I don't like the position, even though pivot points, I suppose I did say pivot points aren't really a true reflection of volatility. So breakout, pullback, sell, okay? But I so prefer selling high, like the bottom of this range, or that'd be quite nice, actually. Bottom of this range would be great, okay? Or alternatively, some kind of resistance up here. Now, the thing is, you've got the 21 below the 55, and you can see it's currently crossed, and it's indicating a bearish trend. However, remember, your moving averages are lagging, and your volatility indicates trend. Your moving averages indicate momentum. You can see your momentum right now is not very fast. It's currently very low, okay? Do not use moving averages in a sideways market. You're going to wait for breakouts, okay? And exercise your bias accordingly. If you do get a breakout to the upside and a pullback, don't just take the trade off the H4 time frame. Go and verify that everything's bullish on lower time frames, higher highs and higher lows. Okay. If you've got higher highs and higher lows, you've got a 21.55 cross in the bullish direction. Bingo. Have a nice day. But remember, you are trading against the overall fundamental bias. Make sure you're aware of that. Manage your risk accordingly. Make sure you pay attention to places where price can take profit. Or sorry, where traders can take profit. Okay. Or alternatively, wait for resistance and exercise that fundamental bias in the direction of strong sell. Okay. Cool. Now, those exact same rules apply for everything right now. You can see that euro dollar, we're currently breaking out. Now, you can see yesterday, price broke out to the upside, broke out of the range. Take a look at your bias first of all, most important. What's my bias? It's sell. Okay, cool. So selling on the euro dollar. Now, you can see here, I've had a breakout. Price has sort of touched the top of this range. Price is going up, going up, going up. If price does not pull back down to the top of this range and make a higher low, you're paying attention to resistance above. And that resistance can be pivot point profit taking zones, or it could be price action. Okay. You can see this candle here, this green candle broke through its resistance left-hand side. Okay. So you're waiting for that higher low. Now, you not necessarily have to wait for the higher low on the daily time frame, price to break out and pull back down here. You can look for an H4, but be aware of the fact that if you're trending, you want to be trending on all time frames. Okay. So if price breaks out and pulls back on H4 and it doesn't do that on daily, just recognize the fact that resistance up ahead is quite important. Don't just close your trade at resistance. Obviously, you're going to verify bearishness on lower time frames. Okay. But just be aware of these things. That this tool is for awareness. Okay. It's about making sure that you know that the overall bias is bearish and you're currently buying because technicals have said bullish. Okay. You've got some divergence. That's fine. Just be aware of it. If, however, you don't get the higher low, pay attention to resistance and look forward to the opportunity to exercise this overall bias. Okay. You are more likely to have unexpected results when you trade against the bias. That's just how it is. Okay. Be aware of that. Go into your trade with full awareness. All right, cool. So here's pound dollar. Let's take a look. Pound dollar. Also sideways, okay, same exact thing, same exact rules. We're playing the exact same game. So right now, euro dollar is the only one so far you're paying attention to that breakout. USD CAD, we've got a strong buy. Okay, now USD CAD, of course, we looked at this yesterday. USD CAD currently at the top of the range. You can't buy here. You cannot buy at the top of the range. Okay, there's no higher low forming. You can see here, you're currently completely sideways. I know that price is at 21 EMA. Look at the volatility. Don't fall into that trap. Now, you might find suddenly that 21 EMA works. It's not about the inconsistency of the market, you adjusting your strategy to the inconsistency of the market. It's about you being consistent. This measures momentum. Okay? Groovy. All right, cool. So that's euro dollar. Let's look at Kiwi dollar. Sell as well. Okay, cool. So looking at Kiwi dollar, also ranging, same as yesterday. So you can see now, let's just sort of drag this over here. You got lows no lower than that. You can even drag it up here. You can drag it. There's various levels on this range, right? But ultimately, you can see here it's low volatility. So what you're really looking for is you can narrow this down a bit, like that, and just wait for that breakout pullback. Okay, not a very nice chart right now. Why would you want to trade that? Okay, cool. Yen pairs. Aussie yen, neutral. CAD yen, neutral. Euro yen, sell. Let's have a look. Euro yen sell. Okay, you can see here, top of the range. That's H4. Sorry, daily. Okay, there we go. So we got this little range over here. Okay, this. Okay. Do we have lower lows, lower highs? I don't want to trade the range, friends. I want to trade lower lows, lower highs. So when price came up to, this is now what, this morning. This is this morning over here. So we came up to the top of this range. We've now dropped down. So what you could do, if you're going to trade this range and you're going to sell this in this position over here and try and take it down to either down there or down there, what you need to see is that on some time frame, you got lower lows and lower highs. Okay, so let's take a look at now. Of course, this time frame here to get a lower low, lower high would take forever. Let's look at H1. You can see no lower lows, lower highs. Look at that zoom in there. Okay, no lower lows, lower highs. How about your M15? No lower lows, lower highs. So what you're looking for now in this situation here is if price comes back up, you can see 21.55 about to cross. If price comes back up and closes at a roll reversal, you could take that down. Okay. But what you'll do is if price closes at a roll reversal, do yourself a favor, go to your M5 chart, make sure that's bearish, that your 21 is below your 55, and then everything, there's not making higher highs and higher lows. Go to your M1 as well. Make sure 21 is below 55, you're not making higher highs and higher lows. Verify bearishness down the line. Okay, but there might be a little trade here for you. You can see in terms of the sort of targets, you got support down here, you got support down here, you got various levels. Just it's a scalp, right? So you're not looking for massive trade. The moment you see price coming down to support level and on one time frame, perhaps M5, M1, or even M15, see a higher high, higher low, it's your signal to get out. Okay. But that's the only way you're going to trade that over there is if you get that lower low, lower high. Okay. If price comes up here and breaks resistance, and that resistance becomes support, game over. Do not try and sell because you're then selling something bullish. Okay. Cool. Next, pound yen. Neutral. Now you might be wondering, why don't I look at the neutral pairs? Well, because if it's neutral, I've got strong versus strong or weak versus weak, right? So here's buy, Kiwi yen. Okay, Kiwi yen to buy. We spoke about price closing at support yesterday. Now, I've got this moving average here. I'm not going to use it because remember, moving averages are not useful in a low momentum situation. I was looking for price to close this support yesterday, or this support, or one of these support areas. You can see we kind of got this weird support here, left-hand side, all these wicks and stuff. Okay, you could use that. I mean, you could. Let's look and see. What you do now is, if price is closed there, you simply look at H4 time frame. Have a look and see where you closed some support. You can see you broke this support over here. Like you've kind of closed here. It's a bit messy, right? But it's okay. And unfortunately, this was yesterday at 4 o'clock, New York Stock Exchange. So if this was bullish, you've missed the trade. Okay. But what you could do is you could trade a continuation. Okay. Let's get rid of this resistance here. Let's look at M15. So a continuation is that price making higher highs and higher lows. Okay. Let's look at H1. Now, my main concern is that price did not pull back down to this support over here. Okay. Also, you can see currently you've got price. This was the buy down here. Now we're all the way up here. What you're going to have to do is you're going to have to wait for this to make a higher high, higher low. And if it does that, then you have permission to buy if you're bullish on all lower time frames. I don't really like it that much, to be honest. I'm not a massive fan. I don't like the volatility. I don't like the move of it. I don't like the look of this chart. I really don't. But if you're looking for slim pickings, if you're really looking for something, you could verify that. But just low lot size, it's not going to be a very good trade. I don't like it at all. I don't like any of this volatility. Look at that chart. What is that telling you? Also, you're out of position between the monthly central and the monthly M3. You're not trending. I honestly don't know if price will come back up here and close this resistance. Like, what's going to happen next, right? I don't like the move of this trade. If this is bullish, and price makes a higher high and pulls back down for a high low and starts trending, you will know. And you will have other opportunities to get into it, okay? That's my view. But as I said, if you want to take the trade, there are ways to verify it. You can verify this makes a higher high, higher low. You can verify that this makes a higher high, get the next higher low. It's both the same thing, okay? And when you verify that higher low, make sure that your 21 is above the 55, price at a roll reversal, and verify on the lower time frames. Capiche? Capiche. All right, cool. Looking at the cross currencies in terms of Swissy, Euro Swissy. I'm sorry for the sniffing, friends. I've still got the flu. Pound Swissy is neutral. Aussie Swissy is neutral. Kiwi Swissy is neutral. CAD Swissy is neutral. I'm leaving those alone. Okay. Now, I mean, you can have a look at the rest of these pairs. Okay. Take a look at the fundamental bias, the rest of these pairs. match them on the technicals, on the charts. Alternatively, market heat map. If you want to use it, you want to play around with it to see how it works, you can. Just remember, volatility is key, okay? Take a look at your highs, your highs. Take a look at your highest pairs for the session, your lowest pairs for the session. Try and match up bias. So if you've got a pair that's currently high, like QE dollar, for example, if this had a bullish bias under the USD currency pairs tab, you only really want to buy if you're trending, right? You're going to sort of identify that QE dollar's gone up, it's bullish, wait for that higher low, okay? If it's bullish and the bias is bearish, well, then look for selling opportunities. If it's bearish and the bias is bearish, look for a lower high, okay? If it's bearish and the bias is bullish, then look for bullish opportunities. That's what you really are doing with that, okay? Cool. And if you want to see what your score chart summary is for all your pairs, look at score chart summary. It's beautiful. Look at that. Those are your sells. Those are your buys. And that's all the neutrals. Look how many neutrals we got. Lots and lots and lots. Okay. So there you go. So you can go have a look at these. Go have a look at these. But just remember, volatility is key, friends. What I'm talking about in terms of the waiting for the breakouts. Okay. Breakout, pullback. Sell. This, of course, we have to wait for tomorrow. Okay. Breakout, pullback, buy, breakout, pullback, sell. Remember your fundamental bias. Remember, verify everything. Okay. And be patient, friends. Now's not a good time to lose money. Be patient. Does the market look like it's going bananas right now? No, it doesn't. Okay. Take it easy. Be patient. Be disciplined. Stay liquid. I'll see you guys tomorrow. Thanks for your time.